What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be covering in this update is a brief Ortex short interest and utilization analysis to give us a better understanding of where the current short interest is at for AMC and look at the potential for these forced share recalls and forced liquidations of these short positions that we have been looking for since the last time they most likely happened back in June. Now, with the way that AMC's price action has been performing over the last 5 trading days, we still have to keep a lookout for this potential for a gamma squeeze. It is only Tuesday, and we're going to go over what we're seeing today so far on AMC, but I still think that there is a significant potential for us to see a lot of delta hedging, a lot of buying volume getting pushed back into the stock going through the end of this week. Now, in addition to all of this, we have Bank of America doubling down on their position. They are going all in on AMC. We have seen statements from them coming out in the past that they are very bearish over across the broad market. Now, the fact that we are seeing such a significant increase in their position in AMC is very, very bullish for what we have going on for this short squeeze play. And we're going to cover that in depth. And in addition, the last thing that we're going to be covering is this financial crisis that is looming in our markets. We are seeing things come out essentially every single day, and nothing that I have seen bodes well for our broad market. Now, again, nobody knows when this situation could potentially play out because the wild card is really how long can the Fed keep kicking the can down the road, but something is definitely brewing, and I want everybody to be prepared for this. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you want to see more videos like this, make sure you hit that subscribe button. So what we're looking at today for AMC, it's currently trading at $49.85 at the current time that I'm recording. We are seeing a little bit of volatility, and this really has to do with what's going on in the broad market. I don't want anybody to be scared of a little red day. We're down 3.5%. This is nothing to be worried about. When we look at AMC over the last 5 days, we can see that a couple of days ago, we were in this $45 range. We ripped all the way up to almost $53 a share, and we are now down just below 50. And again, this price is definitely going to be different by the time you guys are watching this, but at the same time, a red day on AMC, especially where we are at right now, is healthy. It gives buyers an opportunity to reposition themselves. We know the shorts are adding to their position, and this is more of like a consolidation cool-off day before we start that next big leg up, in my opinion. Now, when we come over to Ortex, we can see that the utilization, 90.47%. We aren't seeing the tick up in utilization that a lot of people were expecting. What most likely is going on here is somehow these lending institutions are finding a way to get their hands on more shares to loan out. We have the short interest near all-time highs at 19.43%, which shows us that not only are the shorts not covering their position, but they are adding to their positions as well. So this situation is far from over. We have still yet to see shorts cover in a wide-scale, widespread fashion. Now, coming over to Stonko Tracker, we can see that we now have come down to 147,000 call contracts in the money expiring this week. This is still a very significant amount, but what we could be seeing today, we might be seeing a little bit of unhedging from these market makers as we fall below this $50 mark. And what happens is that when they hedge these options that they've sold, they buy shares. Now, when the price then goes below that strike price for these specific options that they are selling, it is entirely possible that the algorithms and the computers that are making sure these institutions are staying directionally neutral are selling off those shares that were used to hedge those options, and it creates more selling volume. Now, when we come down a little bit further, we have 332,000 contracts out of the money. We definitely could see a significant price movement to the upside, send more contracts in the money, and we would then see the price continue to go up. Now, coming over to Fintel over here, we can see that Bank of America has released some of their 13Fs. We can see that their average share price, 33.45, shares about 1.168 million. In the shares change percentage, they increased their position size by 95.53%. And again, as I said before in the beginning of this video, Bank of America has been one of those institutions that is very bearish on the broad market. A lot of people people have come out and said in the past that AMC and GameStop in these short squeeze plays are the best hedge against a market correction at the current time, but we can get into that a little bit later in this video. Now, when we come over here, this is going to kind of get into what we are looking at with these large banking institutions. Elizabeth Warren demands the Fed breaks up Wells Fargo. What she is essentially saying here is that Wells Fargo, a couple of their different, basically their branches, sorry about that, are participating in some not great business tactics. So we can see in her first letter reported by the New York Times, Warren says Wells has run out of time to fix problems at its bank. The Fed imposed an asset cap on Wells' balance sheet back in February 2018, which, while it was lifted temporarily during the pandemic, is still in place. The bank has been rattled by a series of scandals in recent years, most notably the fake account cross-selling scandal that exploded in 2016 and destroyed the bank's relatively innocent, by Wall Street standards, reputation, much of which stemmed from Warren Buffett's investment. So what we are seeing here is the potential for a big bank crackdown. I doubt that anything's really going to come of this, but here's what we really need to take a look at. We're going to get into this financial crisis that is looming, what nobody sees coming. So what we're looking at here is 7 possible causes of the next financial crisis. When the Fed comes out and says that there's really nothing to be worried about, like in 2017, Janet Yellen said, "I don't see a financial crisis coming in our lifetimes." The then head of the Federal Reserve was right that she didn't see it coming. Nonetheless, well within her and our lifetimes, a new financial crisis arrived in 2020 from unexpected causes. It has been well said that the riskiest stuff is not what you see coming. Now, when we come down a little bit further, a housing collapse. We have been talking about equities, the bond market, and a couple of other aspects of why we could see a new correction in our markets. But we have some new information that I want you guys to be aware of. When we come over to this email chain right here, we are requesting that all agents complete partner registration training by Tuesday. We are experiencing an unusually high volume of 90-day defaults and are expecting a significant release of properties. Distribution of listing assignments will be coordinated between assigning firms and approved agents and will begin immediately. So this notice is coming from Chase, and the real estate market is going to have an effect on everything. If the real estate market starts to take a hit, our entire economy is going to go down the drain. Has it already gotten there? It's entirely possible, but the Fed is doing its best to prop everything up at the current time. Now, this is reflective of the real estate market in the United States, but we also have this development coming out of China. Chinese property giant Evergrande warns again that it could default on its enormous debts. So we can see that this is a global issue. This is not pinpoint into one location, and we could potentially see another housing crisis coming in the future. We know that the eviction moratorium has been lifted, and we are headed towards some event. But again, nobody knows when this is going to happen. The Fed, as I've said in the past, is doing a great job at trying to prop things up and making sure nothing crazy happens sooner than expected. So bringing this back to AMC, we know that Bank of America and a lot of these other really large institutions are doubling down, tripling down, quadrupling down on their investment into AMC and GameStop. Now, the same institutions are the same ones that are saying, well, the market is headed towards a big event, and we are probably going to see at least 10 to 15% downside. This gives me, and I think it should give a lot of you as well, really strong conviction in what you are doing with your money, placing it into AMC. Again, I don't care what you do with your money. You can take it out. You can put more in. It doesn't matter to me. It is not going to change what I am doing. But what we have going into the next couple of weeks, in my opinion, is incredibly bullish. We are seeing a little bit of volatility today, but again, that is nothing to be worried about. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.